and welcome back to F.A.C.E, Patrick. Great to have you here. I know you like these end of quarters for giving you some important signals. Welcome back, my trading warrior brother.
Thanks. Yeah, well, this is the timing's pretty insane because end of the month, end of the quarter. So for any big picture guys, look, even for not big picture guys, this is if there's one time you really should be paying attention is at these Q1, Q2, Q3 closes, right? And they're just there. Why not just look at them? They're in your face, and it's going to remove a lot of the noise. So if you ever want to do swing trading within those periods, at least try not to go against a trend, because those tidal waves, as defined by those quarterly close breakouts, they could pick up at any moment on the smaller time frames, and then you're not understanding why your swing trades are failing. It's because you're trying to go against those higher trends, and in the high trends, higher lows. So it's hard to go against that.
I'm a big picture guy, but I used to use a Polaroid camera. So anyway, Patrick, you want to share your screen here?
Yeah.
Because you didn't have to bring them in to be developed.
I never had a Polaroid. I don't know the feeling of
yeah, you just wave it in the air and it develops that way. Anyway, no, go back to that. What's that cartoon about, buddy?
These cartoons, I just found them so interesting. It's I think there was a book in 1913, or this guy did a book warning about the Fed and what it would mean if they would be able to manipulate the elasticity of the money supply. I forget the name of the book. And there's a whole series of cartoons, which is kind of relays to charts, right? Because if you do a picture, you could convey a lot more information, and it helps crystallize whatever message you want to pass. Same thing as a chart. And this is just these old pictures of the Wall Street and the bankers and how the government fits in there. It's
look at their ticker that goes into tickers like that.
And 100 years
behind
later,
the guy, the stock ticker.
It's still the same game today.
Yeah,
it's still the same game that's happening today. And until that changes, this is the system we have to deal with. So whatever there's manipulation, whatever you're not happy with, at the end of the day, if you want to play the game, you have to look at the charts and see where the actual money flows are going. And
do you think that we're going to be around for the end of the fractional reserve banking system?
Look, that's the most awesome of the questions. And I looked at long-term charts, and I have scenarios where this could really outlast our wildest expectations. You look at the Turkish lira charts, all these currencies where you say, man, they keep adding zeros. Like in the day it happens, look, they can't add anymore. They have to reset. I'm sorry, I'll just add a zero. And I think it's when the wages distance, the minimum wage or the gross domestic income gets really, really outpaced by inflation. That's when you have some type of reset, because people that have the pitchforks, the politicians, they can't win at the polls or whatever. But as long as they keep adding zeros, because look at these numbers here you see on that screen, like it's the same game.
That was a lot back then. Yeah,
that was a lot back then, but the system's still there. And I'm sure in the 1950s, people say, it can't last, in the 70s, 80s. So as long as the wages keep going up and the people could keep feeding themselves, the system's going to keep going.
That's a great point. You can't, you have a hungry population. That's it. So, what's ironic is what may bring really the heaviest pressure on it is what's happening in agriculture rather than financial markets, because if there are these, and there are, major supply shortages, disruptions. I saw interviews of wheat farmers who said, it's just so dry in Kansas, they can't even plant. And the ones that can fertilizes so much that even at $15 wheat, they can't make money. We're going to have a major problem with, they talk about tightening our belts. We're going to need one to hold up our pants. I mean, I could use losing 15 pounds, but I think food security is really going to become a buzzword in the next couple of years.
Yeah.
What do you think?
I was looking at some inflation charts, but long picture, like for a whole bunch of countries. I was going through that, and even before all this, like everything's financialized or computerized or everything's linked, the inflation rate back in the US, Canada, Great Britain, even in the 60s or 70s, everything was tracking each other. And because the food prices, if they go up for everybody. It's worldwide. It's like, even if we think that everything's globalized today, I think it's always been globalized to a certain extent. And man, I was looking just today at the sugar charts. The prices were so far off the 1974 peaks in sugar. We had like, I could show you the chart.
Go ahead. Well, it got to what, 60 cents?
Yeah, exactly. So I had like 60.
What a memory.
65. Like I had a peak, and I was just looking at this chart. Look at that. Look in the 70s. Our sugar 60.
So like it's still embryonic, even though it's just started.
Exactly.
Even though it's had a huge advance from, I remember it in the 6s and 5s, and some of the moves we had. The grains have even been more dramatic. Cotton, it's you go across the board, and that's why I want to talk to you. And before I go any further, I know I was going to bring this up at the beginning when I introduced you, Patrick, but great call on gold when I was on your broadcast. I was looking for higher numbers in the dollar, which manifested, but you and Kevin said, well, Dale, can't gold and the dollar go up together? And at that time, I was wrong. You guys were spot on. You had that huge run in, silver from 21.30 to 27, and big moves in gold. Gold outperformed. Nice work, Patrick.
It's one thing I've learned is that I know nothing. And sometimes and again, guys, you got to take a step back, because, the DXY, let's say you just live, you're a new trader, and for the past year or 2 years, there's a correlation. Every day you look at the ticker, you see DXY go up, gold goes down. But those correlations, if you zoom back out, there's periods where for years, the gold and the DXY, this is a little trick I do. The gold and the DXY went up together. So to just look at one piece of evidence and not new.
Thanks for mentoring me.
Well, look, it's
true.
You just need to be curious, guys. Look at this period. So here's the DXY and gold going up together for this in 2005 to 2000. And there's a whole bunch of periods like that where they, even here off the lows, they went up 2000, and here, look right here towards since something like, even here, everybody thought the DXY is going up, gold should be going down, but it actually went like $200-$300 up.
Yeah. What's your take, as long as we're on this chart of this little double top here? To me, it looks like we really have to hold that 1880 level on a shorter term chart, which it did this week. If you look at a daily, that was a real important part of it. You're looking at monthly, but 1880 is a very, that's 1980. There you go. So those lows that we have here, if they take those out, I think if you're a gold bull, that's where you can trail your stop up to now.
Yeah, for swing traders, you don't want to. You had that wick, and now it's moving back up. So essentially, for a swing trader, definitely you could put your sell stop here. It's a wall, also important. What a wall I call a wall is previous resistance turn support, or support turn resistance. And right here, you see this used to be resistance, now support breakdown. So now it's resistance broke out here. So this is critical. This is a very meaningful. So that's the market telling you, 175, that whole range here. It's like it's a
make or break for the bullish scenario.
Well, for that time frame, right? And so you want for the higher time frames to keep going up, you still need help from the smaller time frames, and you need more smaller time frames upswings to keep building up. So the weekly looks bullish, then the monthly looks bullish. But you definitely want this to hold. And on the monthly, I know a whole bunch of people told me that wick's ugly. So I'm just hoping today we get to chew a little bit on this to make this wick a little bit less ugly. It is a monthly confirmed breakout also here, if you consider this the base.
Right.
Here you could have had a breakout.
Right.
I'll go on the quarterly. Look, this is pretty insane. So let's see what happens today. But this could be the highest quarterly close ever for gold, ever.
Great point.
And this is a huge signal, guys, right here. And I put the gold futures, and I also put spot because there's a little bit of different. Oh, Jesus, what do I do? XAU USD.
Do you pray when you trade? I just heard you use the word.
I sacrifice 3 sheep every morning. Make sure I have everything's aligned.
I love lamb chops, man. Anyway.
Yeah, it's okay to sacrifice, guys, but you have to eat the meat. Don't waste it.
Yeah.
So look, this is pretty meaningful right there. Look, and when I look at breakouts, I don't want it to be marginal and just be above. This has to be
strong
meaningful
close.
there.
Yeah.
So if it could
Definitely
close up $10-20 today, guy, this is pretty sweet deal there as a continuation breakout, because this is a pull flag. Whoops, cancel. This is a pull flag. Patrick, let's make that line thicker. Text. Okay, there you go. So that's pretty much a pull flag that I would add on top of the breakout line or here. Yeah. So this brings us to, and what's fun about pull flags is the energy in, it gets like hammered down. And then as soon as the beach ball could go out, you kind of you can expect some type of trajectory, which gives you, and I know a lot of people, you can't predict in time, but TA, it can help you. So you could say probably in Q3 of next year, gold could be in this area right here, there. So around 2,500, 2,600 on a quarterly basis close. It doesn't mean it could probably overshoot on smaller time frames. So this could be a pathway here. It could even go below that line. I don't know where it's going to bounce, but this could be some type of roadmap. But this is what the market's telling you. If it can't make it close below that beautiful flag or pennant.
Yeah.
Wow, it'd be really awesome to chew on that wick though.
Silver look pretty similar, which looks like it's leading. The gold silver ratio, Patrick's been moving sideways for, I don't know, feels like months.
Yeah, I have something good on that though. So that's a big, I'll go on the daily because that's super scary there. What's happening here? You really want that to
you don't want it to pop for a bull market in metals, right?
So this is what the
compression, if you draw a line, I mean, it's really compressing into a, kind of what do they call that? Okay, it's outside the arc. Nice. Okay.
Log. Hold on. The arc, wait, it's to stretch that.
Okay.
Patrick, you're just redrawing the arc. You're not allowed to redraw lines. What are you doing, Patrick? You're cheating.
It's against the law. It's wokeism.
There it is. So this 1, 2, 3. So we had that wick. So the arc, if it's meaningful, it's going to serve as resistance or the dome, because there's two pressures right now. There's the arc, the bigger overbearing arc, and on the smaller time frames, you have that dome creating pressure, but here you have an arc, so it's a battle. This wants to break out,
but that'll delay the bull market in metals.
Yeah, look right here, there. Even here, it's a meaningful pivot line, support, breakdown, support, resistance, and look how it just got sold into yesterday. I was getting a whole bunch of hate mail and trolls. Yes, like when this happened this week, it's over, Pat. Give up.
Oh yeah. Let me ask you something, buddy. You laugh, so you have a good attitude. And most of the guys I know that are in the public domain have a good attitude. Does it ever bother you?
No, it makes me work harder, because if somebody has a contrary opinion, you can't just say, "Oh, you're wrong." Okay, fine. Most of the time they don't even have charts. So, and okay, you have an opinion, you don't have a chart. So at least I need a chart. I need to know what time frame. What are you talking about? Because I understand with charts, it could be bullish on the daily, bearish on the weekly. You know how it goes. These are cycles, right? And they're fractals within fractals. But what I do is I go back to the drawing board and I try to see okay, is there some resistance I didn't see? Is there some support I didn't see? Oh, look, did it break down? And I didn't see that there was a meaningful breakdown. Like here, even you can make a case that the gold
Yeah,
silver
that's
ratio
nice.
could have broke. You try to make a case where,
You do technical analysis live very well.
yeah,
I wanted to ask you, so let me ask you this. I mean, obviously you would favor a downside breakdown of that trend line.
yeah, because there's
The upside, what do you think would happen to the price of silver if we break out to the upside and challenge the low 80 range?
if it goes up here,
Yeah.
so silver is gonna crash. It's gonna melt. It's gonna have a lot of pressure.
Yeah.
You don't want
like $20 if that happens, huh?
Yeah, the correlation of this ratio, since silver is more volatile than gold, this is highly negatively correlated to the silver price. Historically, the gold silver ratio, it's practically silver that's moving this thing more than gold. And you gotta, if this moves to the upwards, that means there's it's a fight. It's
because that really wasn't much of a correction from that big break over 130. So I mean, it could rally and still be a bear. Yeah, see what I mean? It could go up
right here. Yeah, definitely.
Right.
Yeah, and that would imply, like you said, their silver price would definitely go down here. But that would be one of the greatest, best entries to enter
July,
right here.
Patrick.
Yeah,
July.
Oh, look, I didn't see this line right here.
See how we learn when we do this? All right, so you have a view on the dollar. Could this be a time where the dollar is soft and peaking out here?
Yeah. So
it overshot my original target was like 96.5 when we were talking, but this looks complete to you, doesn't it?
Well, yeah, it looks like a tombstone. I was drawing that yesterday. I don't know what pattern that is. A diamond, those diamonds.
It looks like home plate for baseball season. Yeah, it's got a point on the base. Anyway, it looks like home plate. So, yeah,
this is super stretched. Yeah, the dollar could. We'll have to see by the end of the month if it could stay within here. There's a lot of clues though that this is below is a 7-year rate of change for the dollar. It gives you some indications on the momentum, right? So even if the price of the DXY could go up, it's not going up as fast as it used to. So right here, you see the rate of change is just plummeting. The rate of change is below its own 7-year EMA. So that's a bullish breakdown right here. And it's about to go negative. So that means whoever's holding US dollar today that owned it 7 years ago, right now they haven't made any money. They've lost all the gains that they had previously here. And every time we've had some of these peaks or we had a breakdown, it's like the momentum, it's hard to get out of there. Every time it crossed from bullish, let's do it here. The US dollars has been in a downward spiral. So you sell, this is an indication to sell the rallies. Does it mean the dollar is going to plummet to zero? Who knows? It depends of the euro and all the other ones in the basket. But it is telling you that you're less susceptible of having this crazy move upwards.
Yeah, interesting.
I see. Every time we went through below zero with the US dollar for about 5, 6, 7 years and went sideways. And coincidentally, in 2003, that's when silver really started heating up in commodities from 2003 to 2011. That's when silver really heated up.
Okay. All right. So a quick look at WTI since we have this war going on. I'm curious what you and Kevin see there.
Yeah, that's a super, well, it was bullish chart. Now that wick is telling us that it's ready for a consolidation. And look, you can't even see people. Oh, well, why is oil stopping? Well, look, it's starting to hit. This is like a blow off top here. 1, 2, 3. It's telling you that it's been. It's just waiting for an excuse to consolidate.
Yeah.
So what you want to do right now is, that's resistance. The market's telling you right now. So, okay, where's my support? So support is the wall. It's previous resistance. So this is not probably a natural pathway is a pennant.
Yeah.
Or some type of flag. above here where everybody thinks it's the end of the world, you know that you're still doing higher lows on the bigger time frame. See, right here, here, here. So if this ever goes here, it's great because you're resetting momentum. Everybody probably thinks inflation is done for, but look at that. There's another right here. This I would buy the insert a swear word right here.
I know what you're saying. I know what you're thinking. Back up the truck, you could say.
Back up the truck. Yeah, that's a nice way because look at the momentum, the 7-year rate of change.
Yeah, it's the opposite of the dollar.
It's going up. So you don't the bull run in oil is probably going to be when the rate of change. Okay, maybe not that high. Let's focus here. Whenever we get, if ever you've made 400% by holding oil for 7 years, that means that's how much oil could get stretched before people say, okay, that's it, guys. I'm taking profits, or new supply comes on hand. Like whatever narrative there is. But look, it's just starting. So there's a lot of fuel left. You could, of course, have huge drawdowns like we had here, even here. We could actually be even here, Dale. Could have a huge drawdown like the early 2000s, maybe a global bust. But it's still bullish. You buy these opportunities. Look at that here. Look at a great buying opportunity. So this is in the cards. We'll find out. There's one catch to this. One caveat is the copper chart.
Are you bearish? Because I am.
Copper is looking pretty sweet.
Okay. Not even a pullback to 320 or something like that?
I think, look, it's bull flagging like it did in 2005, 3. It looks like the sugar chart. It's not giving, I don't think it wants to break out this month because now it's getting sold into, but it's not looking as bad as the oil chart, which because copper had time to consolidate. This maybe we're going to expect this from oil right now. It's probably going to need 6 months, 8 months of a breather, right? But copper's already done that breather.
All right. How about S&Ps, Patrick? We'll wrap with that. Is this a failing rally in S&Ps, or are we going to new highs? That's $1 million question.
Well, I have an exit answer to that. Is right now, since we're in inflation period, I say nominally it's still possible it's going to go up. But if you measure it in a commodity, it will not. Okay. So, let's say,
or even if the dollar, and sometimes a weak dollar could be constructive for transnational stocks, etc., for exports. I don't know what we have to export, but
this thing could definitely melt up to some crazy levels, especially if it breaks out above. This is a bearish rising wedge. So this is very bearish as soon as it breaks below this lower trend line. But sometimes you see these moves where it blows up. Everybody thinks paradigm shift, and then it just comes crashing down. That's what happened with oil, like to the inverse, right? Yeah. A lot of commodity charts, it was the inverse of that happened. So that's definitely possible. But guys, you have to measure it in, let's measure in copper. Look at that. It's not as pretty. Measured in inflation and copper. Look at that. Look at the S&P. It can't even beat. There's no U.S. equities that's beating copper since 2000. Think about that, guys. It's all an illusion.
Okay, I have a question. Patrick, these ROC charts are diverging against the price chart. Is that the way to read that?
The rate of change chart, the rate of change
diverging against the price chart. Yeah. I'm not sure what he means either.
Well, let's say the price action can go up and the rate of change is still blowing up. Yeah, you could use it as any type of indicator where you look for bearish divergence or bullish divergence. It works in the same way. So a trend will be intact as long as the indicator is able to do new highs while the price action does new high. That's great. But when you see huge divergence with any type of indicator, I could have put a blah, blah, blah indicator here. And if the indicator is showing that it's going higher, but the price action is not, that's a big warning sign. And at the end of the day, just rely on the price action itself. If it's doing a classical charting breakdown, like here, look, this is beautiful topping structure, breakdown, retest, very weak retest, can't even retest that breakdown line. That's all she wrote, man. And after that, look at that here. Even the rate of change, look how beautiful it broke down here. Yeah. Look, it's super weak, super. So now it's hitting some support. So we have to wait to see how that plays out.
Okay.
But
well, Thank you so much, Patrick, my
Yeah.
trading warrior brother.
That
Another
was fun.
great, I mean, great watching you do this live and showing your work. You and Kevin, I think,
Yeah.
have are elite technicians in my personal opinion. And
That's very nice. But every day I learn, I keep practicing, and that's how it looks like maybe a lot, and I'm proficient, but it's just I'm a geek, and I just spend
yeah,
countless hours just doing these things. And
you love it.
anybody could do this. You just have
Yeah.
to spend the time.
You love it. You love discovering these patterns that you may have been looking at the same chart, and like a month later you see something new, and it's like it's an art. It really is kind of an art, not a science. And you've got a great paintbrush. So I want to thank you, Patrick, for being here and sharing your views with us, and always rooting for you and Kevin that your next quarter is greener than this one.
That's so nice, Dale. Really appreciate that.
And the best way for people to follow you on Twitter at BadCharts1. And
Yeah, exactly.
And the name of your website again?
NorthStarBadCharts.com.
Okay. So follow the North Star to Kevin and Patrick, and you may find your way in the metals and other markets they cover. And
you're a poet, Dale. I'm super impressed.
Oh, well, it's just, something that I'm only the instrument. The spirit flows through me. And thank you, Patrick.
Thank you.
Good luck. And we'll get back together in the summer, see how things are shaping up. And again, thank you for having me on your show.
Yes. Thanks.
Alex is saying, get a room. Alex, I only go both ways on a mic. Okay. Just to clarify things to you. All right. So thank you, Patrick. Have a great weekend and a great quarter coming up.
Thanks. You too. Bye-bye.
All right. That's a wrap, everybody. Remember, don't just count your charts and trend lines, count your blessings. You could join the team in the morning edge, where you get the edge on the bias chart. So see everyone tomorrow for TGIF. Steve has a special guest. Adios, everyone. Thank you. Love you guys. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.